Welcome to the Stock Market Daily News Podcast. Today is January 20th, 2026. Let's unpack the action from yesterday's markets and get you primed for the trading day ahead. Major U.S. indexes closed mixed on Monday. The S&P 500 edged up to finish just above 4860, while the Dow Jones slipped slightly and the Nasdaq held steady, bolstered by tech stocks. But behind the big numbers, jitters are growing about global fiscal policies, health sector turmoil, and international currencies. We'll break down what moved the markets and what you need to watch. Let's dive right in. First up, health insurance giants took a beating after the Trump administration proposed keeping Medicare Advantage payment rates almost flat for 2027, rising just 0.09%. UnitedHealth Group fell nearly 9% to $317.51. CVS Health dropped 9.4%, and Humana plummeted over 13%. The move spooked investors as analysts were hoping for a bump closer to 4 or even 6%, and it highlights mounting political pressure on insurers' profit margins. If you're exposed to the healthcare sector, keep a close eye. This could signal continued earnings pressure ahead. Across the Pacific, Japan's government bond market sent shockwaves through global markets. Prime Minister Takaichi pledged to pause Japan's consumption tax for 2 years if re-elected, triggering a sell-off in Japanese government bonds. Yields on 40-year bonds surpassed 4%, an all-time high. Why does this matter? As Japan's borrowing costs rise, Japanese investors might repatriate funds, reducing demand for U.S. treasuries and potentially nudging borrowing costs higher worldwide. Markets are testing the limits of fiscal credibility, and it's a warning sign for other highly indebted countries. In Asia, tariffs and currencies were in focus. President Trump's renewed threats of higher duties on South Korean goods pushed the Kospi index down nearly 1%, and the South Korean won weakened after several days of gains. Meanwhile, the Japanese yen held strong, trading near 154 per dollar, fueled by speculation over government intervention. This adds global uncertainty just as investors gear up for a blockbuster week of U.S. tech earnings. Switching gears to commodities and crypto, silver stole the spotlight on Hyperliquid, a crypto exchange, with silver contract volume nearly touching $1 billion, more than major altcoins like Solana and XRP. As Bitcoin stagnates near 88,000, traders are turning to silver, gold, and other hard asset trades for volatility and hedging, signaling a subtle shift in risk appetite within the crypto markets. Gold continues to shine, up about 15% over the past 30 days, signaling ongoing macro stress and capital rotation into safe havens. Natural gas prices in the U.S. jumped around 30% as frigid weather curbed supply. Energy traders, take note. To recap, U.S. stocks finished mixed. Health insurer shares plunged on regulatory uncertainty. Japanese policy shifts rattled fixed income markets. Asian stocks dipped on tariff threats, and commodity trading is reshaping crypto derivatives. Looking ahead, keep your eyes on U.S. mega-cap tech earnings this week and Wednesday's Fed decision, where rates are widely expected to stay put. Thanks for tuning in to Stock Market Daily News. Subscribe and follow for tomorrow's essential market updates and stay ahead of every trade.